The S&P 500's first 6 months are in the books, with the index up around 14.5% to start 2024. It's been a strong start to 2024, with some stocks doing exceptionally well, but others have been struggling badly. Today, let's talk about the S&P 500's best and worst performing stocks. First up, let's look at the top performers. In the top spot is Supermicro Computers, ticker symbol SMCI. Supermicro Computer Inc. has seen a remarkable 188% rise in its stock price, driven by strong demand for its customizable high-performance servers, crucial for AI workloads. This growth is fueled by the booming AI sector, with revenue projections showing significant year-over-year increases. The company's adaptability and strategic positioning in the market have made its products highly attractive compared to competitors like IBM and Hewlett-Packard. However, with its current valuation at 23 times forward earnings, there are concerns about whether this growth is sustainable. Some analysts caution that the stock may already be overvalued, potentially limiting future gains. Despite this, continued investor interest in AI and tech infrastructure could sustain its upward momentum. Looking ahead, Supermicro aims to reach $25 billion in annual revenue, which would justify its high valuation. The company's ability to meet these ambitious goals while maintaining profitability will be crucial for its long-term success. In second spot is Nvidia, ticker symbol NVDA, which has become synonymous with artificial intelligence. Nvidia's stock soared by 149% in the first half of the year, driven by substantial growth in its data center and gaming divisions. The company reported record revenue, with a significant portion coming from its data center segment, which saw a year-over-year increase of more than 400%. This growth is fueled by the rising demand for AI-driven technologies, positioning Nvidia as a key player in the AI and computing markets. The gaming sector also contributed with the launch of new GPUs and enhancements in AI capabilities, further solidifying Nvidia's market leadership. Investors have been optimistic about Nvidia's strategic partnerships and product launches, which continue to propel its growth trajectory. Despite the impressive gains, some analysts point out potential overvaluation concerns. Nvidia's strong earnings and innovative products have led to high expectations, and maintaining this momentum will be crucial for its future performance. Rounding out the top three is Vistra Corp, ticker symbol VST. Vistra Corp saw a substantial increase of 123% in its stock price during the first half of the year. This growth is largely attributed to strategic investments in clean energy, including solar and battery storage projects, and the acquisition of Energy Harbor, which expanded its nuclear capacity significantly. These moves have positioned Vistra as a leader in the energy transition, with a focus on sustainability and reliability. The company also executed a considerable share repurchase program, reducing outstanding shares and boosting investor confidence. The Inflation Reduction Act further supports Vistra's renewable and nuclear initiatives, providing potential long-term benefits through tax credits and incentives. Despite these positive developments, Vistra's revenue in the first quarter showed a decline compared to the previous year. However, its strong focus on future growth and clean energy investments suggests a promising outlook for the company. Now let's look at which stocks have been the worst performers on the S&P 500. Topping this list is Walgreens Boots Alliance, ticker symbol WBA. Walgreens Boots Alliance experienced a significant decline, with its stock down 54% in the first half of 2024. This drop is largely due to several challenges, including lower than expected earnings and a challenging retail environment. The company announced plans to close around 25% of its stores, aiming to adapt to changing consumer behaviors and pressures on pharmacy margins. Despite reporting an increase in overall revenue, Walgreens faced substantial operating losses, particularly in its U.S. healthcare segment, due to impairment charges related to recent acquisitions. The retail pharmacy segment struggled with lower retail sales and increased competition from online retailers, impacting its profitability. Walgreens also adjusted its profit forecasts downward, reflecting a difficult operating environment and ongoing challenges with consumer demand and inflation. This combination of factors has led to investor concerns about the company's future performance. The second worst performing stock on the S&P 500 this year is Lululemon, ticker symbol LULU. Lululemon Athletica's stock has declined by 42% in the first half of 2024, despite reporting better than expected earnings for the first quarter. This drop can be attributed to several factors. Firstly, the company has faced challenges in its core North American market, where growth has stagnated due to increased competition and a shift in consumer preferences. Additionally, supply chain disruptions have led to inventory issues, causing missed sales opportunities and higher operational costs. Internationally, Lululemon has seen robust growth, particularly in China, where premium sportswear brands are gaining popularity. However, this has not been sufficient to offset the overall downturn. The company has also been impacted by weaker than expected demand for its accessories and a decline in retail sales in some key markets. Analysts have expressed concerns about Lululemon's ability to sustain its high growth rates given the current market conditions. To address these challenges, Lululemon has announced a significant share repurchase program and raised its profit forecasts for the year. While these measures have provided some support to the stock, the overall sentiment remains cautious. Investors are closely watching how the company navigates its supply chain issues and adapts its strategy to maintain growth in a highly competitive market. The third weak performer on this list is Intel, ticker symbol INTC. Intel's stock has declined by 38% in the first half of 2024, facing significant challenges. The company's revenue fell by 14% in 2023, and earnings dropped by nearly 79%, highlighting ongoing struggles in its core businesses. The semiconductor giant has faced increased competition and delays in product launches, impacting its market position and financial performance. Intel has been focusing on new initiatives, such as its Intel Edge platform and the introduction of Intel Foundry to boost AI applications. However, these efforts have not yet translated into substantial financial recovery, and the company's profit margins remain under pressure. The decline in stock price is also partly due to legal issues, including a class action lawsuit related to securities fraud, which has further affected investor sentiment. As Intel navigates these challenges, its ability to innovate and regain market share will be crucial for future growth. That wraps up the top 3 and bottom 3 stocks for the S&P 500. Do you think the top performers will continue to do well, and can the struggling stocks recover? Post your thoughts in the comments.